Hello and welcome back to Global Value. In today's video, we're performing a fundamental stock analysis of Regeneron Pharmaceuticals Inc., ticker symbol REGN. We're looking at Regeneron today because this has been a very frequent subscriber request. So right now, the business is trading for $737.15 per share. Over the last year, in stark contrast to a lot of the rest of the market, Regeneron is up 24%. So what are we missing? What could the market have possibly discovered about this business this year that led to this kind of outperformance? Over the last 5 years, Regeneron is compounding at an annual rate of 13.5%. Over 10 years, the business is compounding at a rate of 15% annually. And going back prior to the global financial crisis, over the last nearly 18 years, Regeneron is compounding at a rate of 29% annually. So really taking off and really crushing it over this period. Over this period, the business is almost a 100 bagger in the last 18 years alone. Regeneron is about $40 below their 52-week high, and they're up more than $200 from their 52-week low. They're a very large business. They have about a $79 billion market cap. For additional background about the company, Regeneron is a biotechnology business. Regeneron Pharmaceuticals discovers, develops, and commercializes products that fight eye disease, cardiovascular disease, cancer, and inflammation. The company has several marketed products, including Eylea, approved for wet age-related macular degeneration and other eye diseases, Praluent for LDL cholesterol lowering, Dupixent in immunology, Libtayo in oncology, and Kevzara in rheumatoid arthritis. Regeneron is also developing monoclonal and bispecific antibodies with Sanofi and other collaborators, and independently has early-stage partnerships that bring new technology to the pipeline, including RNAi and CRISPR-based gene editing. Regeneron Pharmaceuticals was incorporated in 1988 and is headquartered in Tarrytown, New York. So for our fundamental analysis today, we are performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Regeneron based off their business fundamentals. This analysis is still an evolving process, it's a work in progress, and it's an opportunity to learn in public, so it will continue to improve and get better over time. With that said, let's get right into today's analysis. Starting things off with metric number 1, we want their average return on capital over the last 5 years to be above 14%, and there are 2 key reasons for this. The first is that over the long run, over the course of decades, a stock is likely to return approximately what its underlying business returns, and these business returns are going to be captured here by return on capital. The second is that the average publicly listed business earns about a 7% return on capital, so by looking for a benchmark of 14% or higher here, we can potentially build in some margin of safety for ourselves based off the overall quality of the business being about twice as good as average. Regeneron has earned far above average returns on capital in all 5 of these years. Their lowest returns were just under 19% in 2019, and since the COVID-19 pandemic, their returns on capital have really picked up. Over their last 12 months, they're earning about 27% returns on capital, and averaged out over these past 5 fiscal years, Regeneron is averaging about 29% returns on capital, so more than 4 times better than that of a typical business, and twice that benchmark we're looking for. This is a massive check to start things off on metric number 1. Next up, for metric number 2, here we're taking a high-level overview of the growth of their business. So we're looking for revenue, net income, and free cash flow growth over the last 5 years. And this metric is going to be all or nothing in nature. Either all 3 of these are going to be up for this to be a check, or if even one of them is down, this entire metric will be an X. We'll also be including their last 12 months worth of numbers in our calculations here. So over this period, Regeneron has more than doubled their total revenues. Their earnings have more than quadrupled, and their free cash flows are up by more than 5 times. So this is massive growth across the board here for Regeneron. This is our second big check of the day. It's specifically great to see that they've had such strong free cash flow growth, because free cash flow is really the lifeblood of any business, and a business can use its free cash flows to reinvest back in the business, make acquisitions, buy back shares, pay down debt, or pay dividends. So ultimately, a business's abilities to produce free cash flows now and until Judgment Day, discounted back by some reasonable interest rate, is what that business is going to be worth. So great to see such strong growth here for Regeneron. We are 2 for 2 to start things off so far. Next up, for metric number 3, here we're taking the perspective of an individual shareholder in the business by looking at Regeneron on a per share basis. So we're looking for earnings per share growth over the last 5 years. Again, we learned that their earnings are up massively, and at the same time, Regeneron has actually slightly bought back a small number of their shares. They've repurchased around 2% of their shares outstanding over the last 5 years. So with these slight share buybacks and this huge earnings growth, this is massive earnings per share growth for Regeneron. This is another check here on metric number 3. Metric number 4 is going to be very similar. So here we're looking for free cash flow per share growth over the last 5 years. For almost the same reasons that their earnings are up, their free cash flows per share are up as well. So this is yet another check here on metric number 4. So far through our first 4 metrics, we are a perfect 4 for 4 for Regeneron. Next up, for metric number 5, here we're evaluating how the business is utilizing debt. So we don't want to be investing in overly levered businesses, because during economic downturns, it's overly levered businesses that are going to be at the greatest risk of poor outcomes. So we want their net debt, which is their total debt minus their cash and their short-term investments, to be below the amount of free cash flow that they produced over the last 5 years. For Regeneron, they ended 2021 sitting on $9.8 billion left over in cash after paying off all their debt. Right now, they have more than $10.3 billion of cash after paying off all this debt, and they've been massively cash flow generative in all 5 of these years. They produced more than $13.4 billion worth of free cash flow in these last 5 years alone, and in their last 12 months, they produced more than $5.1 billion worth of free cash flow. This is, again, a very strong check here on metric number 5, as it looks like they have a rock-solid balance sheet. They're sitting on a huge cash cushion and they're very cash flow generative, and we're perfect still through our first 5 metrics. Then our 6th and final metric, the big metric of them all, we want their average free cash flow to their total enterprise value to give us a yield that's above 5%. If this is the case, this will potentially give us a slight risk premium to the yield of the 10-year treasury and potentially offer us a reasonable starting point for a valuation of Regeneron. So we're using their total enterprise value because it takes into account both their market cap and their net debt position, and it's going to give us a perspective of the economic reality of the business that's more similar to as if Regeneron were a private company. Right now, Regeneron has about a $68.5 billion total enterprise value, and we learned that in the last 5 years, they produced $13.4 billion worth of free cash flow, meaning that they're producing about $2.7 billion worth of free cash flow in an average year. So when we divide their $2.7 billion of their average free cash flow by their $68.5 billion total enterprise value, that gives us an average free cash flow to enterprise value yield that's just under 4%. So while that is approximately in line with the yield of the 10-year treasury, that's below that 5% benchmark we're ideally looking for. So coming in all the way at the end here on metric number 6, this is going to be our first and only X of the day on Regeneron. Worth being aware of, though, is that over their last 12 months, they've earned quite a bit of free cash flow. They've produced more than $5.1 billion worth of free cash flow during that time. And so to get a current free cash flow to enterprise value yield for the business, when we divide their $5.1 billion of their last 12 months of free cash flow by their $68.5 billion total enterprise value, that gives us about a 7.5% current free cash flow to enterprise value yield for the business. So that would be above that 5% benchmark, and that's nearly twice the yield of the 10-year treasury right now. So because these two are split on opposite sides of this risk premium that we're looking for, it's likely the case that the economic reality for the business is somewhere in between the two. So just because this is an X here doesn't mean that you're going to toss out Regeneron in its entirety. This business could still be worthwhile to dig in and learn more about, and this analysis is not a buy or sell recommendation of any security. It's meant to be a holistic overview, and while these metrics are simple, when they're combined together, they can be very powerful. Then everything we've discussed so far is important, but there's something missing that, in my opinion, is the main reason to analyze Regeneron, which takes us on to using a discounted cash flow model to come to a potential fair value for their business. So a discounted cash flow model is just like any other model in any other discipline. Its outputs are going to be sensitive to its inputs. Here we're starting with an average of the free cash flows that the business has produced over the last 3 years. Then we're using historical growth assumptions based off how the business has grown their free cash flows to project these out into the future. It's up to you to do your own homework here to determine whether or not these are going to be potentially accurate and applicable going forward for Regeneron. But if we assume a growth stage for the business where they grow their average free cash flows at a rate of 5% annually for the next 10 years, then we assume a terminal stage for the 10 years out after that, where this growth rate declines to growing at a rate of 4% annually. If we were to add in their tangible book value today and we were seeking a potential 10% rate of return from Regeneron, then it looks like a fair value for the business is right around $594 per share. So that's in the range of where the business has traded at over the past year or so, but that is more than $140 below their current stock price. Using these same historical growth assumptions from today's valuations, it looks like you could reasonably expect about a 6% rate of return going forward for Regeneron. Please keep in mind that there are some reasons why this may not be potentially accurate for the business. Biotechnology pharmaceutical businesses tend not to be the most predictable to begin with, especially in a business that's not going to have a super long track record. Even though Regeneron has been a 100 bagger over the past 20 years or so, it likely wasn't a very predictable business for the majority of that time frame. And it's not as old as other businesses like Merck or Bristol Myers Squibb. That may be a potential reason why it's more difficult to predict this out into the future and give us that baseline estimate. Please also be mindful of the fact that this type of analysis is not financial advice, it's not a buy or sell recommendation of any security, and before considering any potential investment decision, please consult with the properly licensed and registered legal and financial professionals. So in just a minute, we'll talk about our summary for Regeneron, but we have to address something first. What are some of the qualitative aspects of this business, especially the qualitative factors around some of the key points for a potential long or potential short thesis of the company? So starting with some of the key points around a potential long thesis for Regeneron, number one, positive early data for several oral biospecific antibodies in blood cancer and solid tumors supports the potential of Regeneron's in-house oncology program. Number 2, Dupixent is launching as a novel treatment for patients with severe atopic dermatitis and asthma, and its benefit should extend to several other allergy-related indications and COPD. And number 3, Eylea has become the leading franchise in wet AMD and other ophthalmology markets because of its similar efficiency and more convenient dosing regimen compared with Lucentis and Avastin. Then for some of the key points around a potential short thesis of the company, Dupixent's potential could be cut short by the approval of novel oral dermatitis drugs such as AbbVie's Rinvoq or injectable asthma therapies like Amgen/AstraZeneca's Tezspire, which could be more effective. Number 2, while Regeneron's Pronluit has entered the multi-billion-dollar cholesterol-lowering market, it faces stiff competition and litigation from Amgen's Repatha, as well as a new competitor, Novartis's Leqvio. And number 3, Regeneron's Eylea is competing with Roche and Novartis in the ophthalmology market, and it could be vulnerable to biosimilars beginning in 2024. Hopefully that offers a balanced perspective around some of the key points for a potential long or potential short thesis of the business. Now it's time for our wrap-up. So in summary, Regeneron checks the box on 5 out of 6 of our metrics. They're earning above average returns on capital in the high 20s over this period. They've grown very strongly over the last 5 years, more than doubling their revenues and having massive earnings and free cash flow growth. Also, somewhat surprisingly, they bought back a small percentage of their shares over this period, so their per share numbers are up massively. Then the business is sitting on more than $10 billion worth of cash and short-term investments after paying off all of their debt. They're very highly cash flow generative over the last 5 years, and over their last 12 months, they produced more than $5 billion worth of free cash flow alone. However, on a basis of their average free cash flow to their enterprise value and comparing that to the yield of the 10-year treasury, it does look like that's just about the same as that yield right now of the treasury, and it wouldn't be potentially offering us that risk premium that we'd ideally be looking for. However, on a basis of their current free cash flows to their enterprise value and comparing that to the yield of the 10-year treasury, it does look like that would be interesting to dig in and do more research about Regeneron. Then, as a note, the business does not pay out dividends. And finally, performing a discounted cash flow analysis of Regeneron. If you've done the work and you believe those historical growth assumptions are accurate and applicable for the business going forward, then it looks like a fair value for the business is around $590 per share if you were seeking a 10% rate of return, and that from today's valuations, you could reasonably expect about a 6% rate of return going forward for Regeneron. So that would likely not be repeating the business's huge performance over the past nearly 2 decades or so, but there are some reasons why that may not be potentially accurate for the business, so it's worth doing your own homework and digging in deeper to learn more if you're interested. It's also worth reiterating that this type of analysis is not financial advice, it's not a buy or sell recommendation of any security, and before considering any potential investment decision, please consult with your financial advisor. This analysis instead serves as a beginning and holistic understanding to help you determine whether it's worth your time and energy to dig in and learn more about Regeneron. One resource that will definitely help you stay up to speed with what's going on in the market and help you learn more about the business is Seeking Alpha. Checking out Seeking Alpha directly supports the channel as I'm part of their affiliate program. So most of you probably know Seeking Alpha as a source of community written articles on different stocks. But over the past little while, they've actually become a lot more than that with their new offering, which is Seeking Alpha Premium. Premium has a number of different features where you can track buy, hold, and sell ratings on your favorite stocks. These ratings are from the Seeking Alpha community, Wall Street analysts, and Seeking Alpha's algorithm. You can see earnings call transcripts, investor presentations, SEC filings, and press releases all in one place. You can add your own margin of safety targets and get alerts for when your favorite stocks hit that level. You can get unlimited access to Seeking Alpha articles, and you can tailor your reading experience based on the type of investor you are. You can get 10 years of financial data on any stock to help you with your analysis. You can also import your portfolio into your Seeking Alpha dashboard to make researching easier. And if that didn't convince you, the best thing is that an annual plan is only $99. That's only 27 cents per day through my referral link down in the description below. Normally, premium is $239, but they are currently running a general offer for $119. But if you use my link, it's only $99. So check it out if you're interested. So as a value investor, you're ultimately trying to conduct this research as if you're going to own 100% of a business and you can truly understand the underlying essence of that company and understand what's important and what's not important for the business going forward. So through this deeper research, you'll learn more about the qualitative and the quantitative aspects of Regeneron, and you'll likely be able to determine for yourself what a reasonable, appropriate intrinsic value for the company will be. So with that said, that's it for today's fundamental stock analysis of Regeneron Pharmaceuticals Inc., ticker symbol REGN. Again, we're looking at the business because Regeneron was a very frequent subscriber request, so I'm happy to make an analysis of the business. So if you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Regeneron with me, and have a great day.